With Giant Pickup and Delivery, you can shop for all the great local products you love, handpicked and packed by our associates. Just for you. All from the comfort of your couch.
And good evening. We are doing it live right here, weeknights in the 5 o'clock hour, Yabba Dabba Doo time in Los Angeles. We get right down to business here with the news-driven hour in the heart of drive time. Mottek On Money, 5 nights a week for you, live on the air right here in 790 KABC. Well, rough day for the stock market. In fact, we see the S&P 500 ending at the lowest since May. The NASDAQ, with all the tech names taking hit today, sliding deep into correction territory on the latest earnings news. Stocks booking back-to-back losses today, with the S&P 500 pulling back as well as the NASDAQ, now down more than 10% from its recent all-time high, which means, a correction. The Dow also down in triple digits, down 252 points today. The S&P 500 slipped 50, and the NASDAQ down 226 points. We did see the reaction this morning following the earnings news, and also a surprise on the upside for economic growth. Looks like third quarter economic growth came in better than expected today, with the latest report from the government showing the economy grew at a rate of 4.9%. That exceeded what analysts were expecting. Where's that recession? Is it underway or not? Well, you might feel it in your gut, but officially, no recession yet. We'll try to get some more insights on that this evening. In the meantime, the tech names, part of the Magnificent Seven, which rallied earlier this year, taking a hit. In fact, Facebook parent company Meta, down nearly 4%, was the latest Magnificent Seven company to release disappointing earnings news following Google's Alphabet parent company. And Tesla moved down about 3%. Google shares down about 2.5%. We'll be getting Amazon this afternoon, and we'll take a closer look at that here in just a moment. Chipotle Mexican Grill, Intel, and Ford also out with its earnings news as the earnings parade continues here. The yield in the 10-year note, which impacts fixed-rate mortgage rates, at 4.84% after recently topping 5%, sending fixed-rate mortgage rates to the highest we've seen in 23 years. What's the Fed's next move going to be? Well, maybe a clue here with the European Central Bank today pausing on interest rate hikes for the first time since summer of 2022, while the Bank of Canada kept its benchmark rates unchanged for a second straight meeting. According to MarketWatch, steeper borrowing costs are dampening consumption there and bringing supply and demand closer to balance. Well, the hot labor summer turning into the hot labor fall. The United Auto Workers Union says it has reached a deal to end the strike at Ford. Investors also taking in the latest report on the jobs. The weekly jobless claims higher by 10,000 to 210,000. Mattel, based here in Southern California, down nearly 8%. Rough day for Barbie today, even as the toy maker beat analysts' expectations in the third quarter after warning of slower demand during the holiday season. Following that big bump on that Barbie movie, we see IBM, Big Blue, bucking the trend, moving higher by nearly 5% as the tech giant's results came in better than analysts expected. UPS, the delivery giant, moving lower by nearly 6% after UPS extended its quarterly streak of revenue misses and cut its full-year outlook. And MasterCard, the credit card giant, down nearly 6% after that company beat earnings expectations but warned about a slowdown in spending growth in the U.S. as well as internationally. Well, a new survey finds L.A. near the bottom of safest cities in the United States. And as you heard our Jim Roop report a moment ago, L.A. number one for flash and grab retail theft in America, according to the National Retail Federation. More brazen crime in L.A. caught on video. This one a shocking video showing a driver robbed on an L.A. freeway after being intentionally crashed into by the robbers. I'll discuss the crime situation out there with the Honorable Dennis ZINE, former L.A. City Council member, former LAPD sergeant, and current reserve officer with about 55 years of service to the City of Angels. Dennis ZINE will be joining me live later this hour. And one of the economic engines of Southern California in the spotlight today at the 9th Annual South Bay Economic Forecast event at Cal State Dominguez Hills. I'll be speaking to the top economist at the Cal State Dominguez Hills Economics Institute and get an update on the South Bay's high-tech innovation and entrepreneurial scene. But first, on your money, the markets, the economy, and the whole works. Joining us live now, money manager Gabriel Wisdom, managing director at American Money Management and author of Wisdom on Value Investing. Gabriel, thank you very much for taking the call. What's your reaction to that better than expected reading on the economy first thing this morning and the market moving lower in the face of all that?
Well, Frank, consumers really should be spending less by this time. because interest rates have gone vertical. Inflation remains quite high. They say pandemic savings have declined. The labor market, as you just pointed out, is cooling, but household spending, which is, of course, the prime driver of everything, remains very strong. Americans spent 5.8% more in August than a year earlier. That outstrips the 4% inflation rate. You know, it's all pretty confusing, but that is normal. Markets and economies are counterintuitive. As Charlie Munger likes to say, if you're not confused, you're not paying attention.
Very well said. Well, hopefully we'll clear up some of the confusion. Furthermore, and in confusion here now, Gabriel, maybe you can explain what the Fed's next move might be, given the latest cards on the table here. Are we in for even higher rates, with mortgage rates already hovering at a 23-year high and credit card rates at a record high at this point? How much higher do you think they'll go?
Well, I think we're going to go higher eventually, Frank. You know, there have been two distinct long-term interest rate cycles in our lifetime, or at least within, you know, the history that we all have some knowledge about. The first rising rate regime occurred post-World War II through 1981. That ended with a crescendo of rates topping 15%, as high as 21.5% on the retail side when Paul Volcker was chairman. And then the second big interest rate cycle, which was downward, lasted from 1981 through 2020. These are 30-year interest rate cycles. So regardless of how we get here, I think rates are going to remain higher for longer, as the Fed has been saying. Very good chance that when they meet next week, the Federal Reserve will not raise rates, because I was looking at a number of quotes from Federal Reserve officials here, and the consensus is they want to see more confirmation, but clearly they have a bias toward higher for longer.
All right, and certainly as we've seen another cycle play out in years past, and that is tech stocks very sensitive to higher interest rates, and that seems to be the case these days with the tech names, the so-called Magnificent Seven, all of a sudden pulling back rather dramatically after leading the charge earlier this year. What about those tech names that have taken such a big hit lately?
Well, that what's happened too is there's been a shift in consumer discretionary spending. There was a big spending boom on things that helped us adjust to being trapped at home, and that was tech gadgets and technology, and then we went on this revenge travel kick, but many people now have sort of scratched that itch. And so we look at the optimistic holiday spending survey by Deloitte. It's pretty clear that the holiday spending situation is not going to favor technology. At least that's the concern. They did a survey of about 4,300 respondents, and everybody says that they will increase spending by about 14% year-on-year average. That'll be 9% more than last year, but 25% more on non-gift purchases like clothing, home furnishings, and holiday decorations. So technology, maybe we just have enough of it for the moment.
On there live with money manager Gabriel Wisdom with American Money Management here in Southern California. All right, what about the names that came in with earnings after the bell here this afternoon? Gabriel, anything that got your attention?
I would say, Frank, there are a couple of names were quite surprising. The Meta surprised me because this is all about the forecast for softening ad sales at the old Facebook. Ford didn't surprise because the labor strike has cost all the automakers considerably. And Ford and GM yesterday decided to shelve this plan that they had for. They're going to spend $5 billion to develop lower cost EVs together, and they put that aside because the electric vehicle market is soft. So that was a little bit surprising. I would say the biggest upside surprise came from Intel. This is really a turnaround story. The Intel Foundry Services, the company's shipbuilding arm, is expected to see a lot of growth, and some of that comes from the Biden administration's emphasis on chips.
And certainly Intel, a tech bellwether, so we're watching that one closely. And also weighing on the markets, of course, is this horrific situation playing out following the terror attack on Israel. And looking at the latest headlines here out of the Middle East, Hamas again launching a barrage of rockets at central Israel today. Cities including Tel Aviv and others have been targeted. The police there are currently dealing with rocket debris falling in the vicinity of Rehovot, according to a police spokesperson. This is being reported by the Jerusalem Post. No injuries have been reported in this latest barrage, but obviously a lot of nervousness, certainly in the Middle East, in the oil markets and so forth. Gabriel, with this very sensitive situation playing out, what do you think ultimately will be the economic impact, at least in the short term?
Well, this could easily broaden into a much bigger conflict. The Senate met, I think, today to discuss the banking committee's proposal for enforcement of cryptocurrency. It turns out that crypto has been the primary way that Hamas and the jihad organizations have been financed. And so the Senate's getting involved in this with something they call the Financial Crimes Enforcement Network that studies the use of crypto, among other, digital assets and the transfer of them. So there's that. But if this conflict in Israel increases, if the war in Ukraine, clearly the allies of Ukraine are in the West, and we know where Xi stands with Putin. All of this could turn into a much greater confrontation between two major adversaries and cause the U.S. to join the fray.
Certainly. And speaking of crypto, we have seen crypto's rally recently with Bitcoin back above 34,000. It's pretty much doubled since the start of the year. I know you don't have the laser eyes on, at least at last check anyway. Maybe you do after this recent run-up here with Bitcoin hovering at around 34,126 here. Gabriel, what are your observations on how the cryptos have performed recently?
Well, Frank, I saw something about Arthur Hayes. He's the co-founder of the BitMEX derivatives exchange. Anyway, there was an essay that was published by him attributing the crypto rally to the costs associated with our U.S. foreign policy, in especially the U.S. military spending promises over the conflicts, and not on the spot Bitcoin exchange-traded fund anticipation. So I don't know. Gold certainly has been rallying since the conflict broke out in Gaza, but so has Bitcoin. However, we do know that cryptos have been funding some of the Hamas, if not all of the Hamas activities. So the goal of approving a Bitcoin exchange-traded fund would, open up the crypto investment area to traditional finance. So I think that is partially what's driving interest in Bitcoin here.
All right, and what about gold? It's near $2,000 here now, down about $4 at $1,993 and change. What about gold here?
I like it. I like gold. I like silver. I like all the metals for the long term. But I think gold, the reason it's come back. I mean, it's near an all-time high. But the reason it's flatline is the strength of the dollar. The past 30 years that I've been managing money, Frank, people and analysts have been predicting crashes for the dollar, government debt crises, and we've had those. The end of American prosperity. Remember, in the 1980s, Japan was going to overturn the United States as a global power. In the 2000s, it was China. And but then there was the Great Recession of '08. The dollar was supposed to crash, but the dollar remains the global reserve currency, and I think that's muted the response for gold, but it's a very, very popular alternative store of value in India and China.
Right. And it should be noted, we see gold now officially outperforming stocks this year as this October rally for gold continues, with gold near its record high here, close to $2,000 an ounce. At this point, Gabriel Wisdom, any specific places where you are putting money now and or taking it off the table?
Well, Frank, you mentioned the conflicts, obviously. These are shooting wars. And so I've taken a second look at the aerospace and defense area. And by the way, Delta Airlines had very good earnings as well. Southwest, not so much. But on the defense side, Lockheed Martin, Grumman, Northrop Grumman, Boeing, Textron, General Dynamics, L3, these are all in a 5-year trading range. So I'm taking a look at an exchange-traded fund that has them all, called the iShares Aerospace and Defense. And then another area that got my attention was on the electric vehicle situation, the iShares Self-Driving EV and Tech Exchange Traded Fund. That's down some 24%. The trading symbol there is iDrive, IDRV. And I think at some point that looks pretty interesting. Tesla CEO Elon Musk raised the alarm last week in explaining why he was slowing plans for a Mexico factory. He said he's worried about the high interest rate environment that we're in. And he says, the vast majority of people buying a car, it's all about the monthly payment. And so we're seeing it reflected in car sales. And by the way, lithium, the primary ingredient for these batteries, is down 67% this year. So we're having a bit of it's certainly a recession in certain sectors of the economy, and I like to take advantage of those.
Very interesting. And of course, we had those bank failures earlier this year with commercial real estate still very much in focus, especially here in the downtown Los Angeles area. I saw that report out of New York today with the Flatiron building, the iconic building being converted from office to residential. I don't know if you saw that report. This is the old, 120-year-old building that will likely be converted to condos rather than rentals. But obviously the struggle continues with that slow return to office and so many of these commercial real estate ventures now defaulting or having a severe financial difficulty impacting the banks. Any thoughts about what's happening in that important part of the economy?
Absolutely. Mortgage rates, have increased again. They're closing on 8%. A lot of home buyers are just giving up on the market for now. And as a result of all this, we have the lowest housing inventory since 1982. Now, 1982, interest rates were far higher than they are today. They were double, triple what we have today. But to mitigate the higher interest rate situation we're in today, a lot of home buyers are gravitating to adjustable rate mortgages. Some new home builders are they're buying down the mortgage, so you pay a lower rate essentially. On the commercial real estate side that you're talking about, this is a more serious situation. And regional banks, community banks, own most of that debt. I would say that's the area that worries me most, because historically every recession we've ever had began with a debt crisis of some kind, usually associated with real estate.
Gabriel Wisdom, money manager, managing director at American Money Management, based here in Southern California, also author of Wisdom on Value Investing. Gabriel, it's always great to speak with you. Thank you very much for that important and comprehensive update here this evening.
Thank you, Frank.
And right out to the freeways we go right now here on 790 KABC. Friends, if you're hurt in an accident, you need an experienced advocate, and Clark Fielding and his team of sharks at Fielding Law are on standby ready to dive into your case. My friend Clark the Shark is fearless for justice and your go-to attorney when injured in an accident that wasn't your fault. Whether it's a car accident, slip, trip, fall, or any kind of personal injury, Fielding Law is here to make sure you get the care, attention, and compensation you deserve. Fielding Law can assess the circumstances of the case, negotiate tenaciously with the insurance companies, and if necessary, file a lawsuit and litigate to seek fair compensation on behalf of you, the injured party. An injury is a major disruption in your life. Medical expenses, lost wages, pain and suffering, property damage, and other losses incurred as a result of the injury are all part of the damages. Don't try and handle this process alone. You need an expert in the process, and the team at Fielding Law are the ones to trust. Put Clark Fielding's number in your phone right now under the word accident. That number is 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KBC. Good evening. Stocks pulling back for the second day in a row with the tech names again leading the way lower. The NASDAQ down another 226 points. And that's the lowest we've seen for the NASDAQ since May after the NASDAQ dipped into correction territory yesterday. That is down more than 10% or more from its recent high. The Dow moving lower by 252 points to end the day at 32,784. The S&P 500 pulled back 50 to 4,137. The S&P 500 also now at the lowest we've seen since May. Looks like the Magnificent Seven stocks, which propelled the market higher, also taking a hit on the latest earnings news. Well, the economy coming in stronger than expected, according to the government, with the reading on the GDP close to 5% for the quarter. And Treasury Secretary Yellen, the former Fed chair, said the U.S. third quarter economic growth of nearly 5% was a good, strong number that points to a soft landing for the economy, but could help keep longer-dated bond yields elevated. And we are watching those bond yields hovering at around 4.84% for the 10-year note. And that, of course, the damage has been done recently with that benchmark bond yield moving above 5% recently, sending fixed-rate mortgage rates to the highest seen in 23 years. The price of oil up about 40 cents now at 83 and change. Gold pulling back nearly $4 at $19.93 and change. In the cryptos, Bitcoin has been on a roll right now, down about $60 at $34,126. We see Ethereum up 3 at $18.02, and Doge at the moment at 7 cents. And now the latest news for you right here in 790 KBC. Mottek On Money continues here in 790 KBC. Good evening. Well, a new survey finds Los Angeles near the bottom of safest cities in the United States. And we got another report today showing that flash and grab retail theft in America is the highest here in the Los Angeles area, according to the National Retail Federation. Not a big surprise, given the dramatic videos we see almost on a daily basis of smash and grab incidents. And another brazen crime in Los Angeles was caught on video this week. This one, a shocking video showing a driver robbed on an L.A. freeway after an intentional crash by the robbers. Let's bring in the Honorable Dennis ZINE now, former Los Angeles City Council member, former LAPD sergeant, current reserve officer with about 55 years at last check of service to the City of Angels. Dennis ZINE, thank you very much for taking the call and give us your reaction to these latest reports.
Frank, it's not a surprise that we see crime increasing in this region of Southern California. I received the latest total number of sworn LAPD officers as of October 7th. 8,977 officers for the entire city of Los Angeles. Everyone from the chief to the recruit in the academy, air support, SWAT team, etc. 8,977 to police the city of this size. The numbers are staggering as far as crime, and as far as the officers, the number of officers ratio to the criminal activity and to the population, it's not working. They offer referral incentives for city employees, $2,000 incentives if they can refer someone to become an officer. That hasn't increased the numbers. But 8,977 is just not enough to do the job. And until we can increase that force, where officers can respond quickly to a location to apprehend the perpetrators, and a district attorney that hopefully will prosecute to the full extent of the law, this trend is going to continue. And it's a very sad situation. With broad daylight, individual driving down a freeway, a collision occurs with the intention of robbing that individual. And unfortunately for him, his goods are gone, but fortunately he survived. And a witness was videotaping that by his camera. I don't know how he put himself in that position, which is a very dangerous position. But the bottom line, Frank, crime is continuing. Police officers don't have the resources to really protect the public in the city of Los Angeles. I'll be very candid with that. And I don't know, they keep on coming up with excuses, but the bottom line is you need officers who can quickly respond to make the difference and make the change. Go to Beverly Hills, you're safe. The city is surrounded by cameras. They have drones that they launch when a crime occurs. They got a very effective police department. They've got adequate personnel. And the city of Los Angeles is just suffering. And no matter what dog and pony show they try, they're not increasing the number of applicants, number of people entering the academy. And at the same time, you got a number of people who are leaving. They're retiring because they're fed up with it, and they're leaving and going to greener pastures. So what we see happening is more and more crime, more and more violence. And the situation that was caught on video on the freeway was absolutely outrageous. Broad daylight to have that situation. Whatever they were taking, they knew exactly what they were doing. But you wouldn't think it would happen broad daylight on a freeway. Nevertheless, it did.
And hopefully with that video, which, again, was shot under unusual circumstances, hopefully be able to nail those people that did that. And not to pile on, but then you have zero bail, right? And, of course, the DA's policies. What's the outlook here?
Well, the DA is absolutely out of touch with reality. As far as public safety, the DA Gascon does not care about public safety, and that's reflective in his policy and his principles. He's got most of his deputy district attorneys voted against him. They'd like to see him move on. The people of Los Angeles are going to have a choice when the election comes up, and if they want to keep him, believe me, crime will just continue. The officers are bewildered. They don't know what to do to find justice in the system where they can do the job in a professional manner, and the criminal justice system is supposed to take over. It's not working because of his philosophy. He aligns with the criminal element. He doesn't align with the victims and the public that are paying the taxes. Somehow he's been distorted from his role as a district attorney of the county of Los Angeles. And again, it's not just LA's impacted. 88 cities in the county of Los Angeles. So there's 88 cities surrounding this region that are impacted by Gascon and his filing policy. He'll file the minimal charge. He doesn't believe in the death penalty. A deputy sheriff in uniform gets brutally murdered, and Gascon does not believe in the death penalty for that type of outrageous crime. It's absolutely ridiculous, and this is what people are tolerating. Hopefully it can change, and if it doesn't change, it'll just be more of the same and worse.
This is Mottek on Money on 790 KBC.
Mottek on Money continues here on 790 KBC. Big day at Cal State University, Dominguez Hills. The president of the university, Dr. Thomas Parham, welcoming movers and shakers in the business world here in the South Bay, one of the economic engines of Southern California. And the South Bay Economics Institute here at CSUDH has released the South Bay Economic Forecast today. And I'm basically here with the whole institute, Dr. Jennifer BRODMANN, Dr. Jose Martinez, and Dr. FYNNWIN Prager. Dr. Prager, first of all, give us your view of the economy and what's happening here in the South Bay.
Well, it's a mixed picture overall. Things are looking good in terms of employment numbers. We're seeing low unemployment. The economy is adding jobs across many different sectors. While the stocks have come down a little bit, they are relatively strong. We have a diverse economy here in the South Bay, and things are going to continue to grow for sure.
All right, we got a surprise on the upside on the economic reading today. The GDP number at nearly 5%. I think it was last year this time. It appeared we were already in the middle of a recession. It's the recession that never came yet anyway, right?
Right. The forecasters seem to be kicking the can on this one. You know, I think basically what's happened is that there was an expectation after COVID that there was going to be a tail off period, and that seemed to be the case with inflationary pressures pushing prices to unheard of levels. We'd not seen that kind of inflation since the early 80s. Thankfully, that never came to pass. Unemployment remained strong. You know, companies were still hiring after the COVID pandemic. We've got amazing human capital here in the US, and people wanted to, companies were hiring, and that meant that in spite of inflationary pressures, that consumer spending was strong. And as we all know, consumer spending is a massive part of the economy.
And here in the South Bay, tech is big, entrepreneurship very, very big. And Dr. Jennifer BRODMANN is presenting on that part of the equation here. Give us an update on how tech companies are doing. A lot of innovation here with, of course, aerospace big and 3D printing and all that.
Yes, we have a lot of investment going on in aerospace, despite the slowdowns in private investment in other industries. Also, top private companies that we've seen by deal count include SpaceX, online media and software services company Internet Brands, and subscription-based fashion platform operator Textile Fashion Group.
All right, that's great. And how's the entrepreneurial spirit here?
It's remaining steady. We still have a lot of interest. There has been a little bit of slowdown in venture capital just because of the higher cost of capital from the Fed raising interest rates.
Also with us is Dr. Jose Martinez, and on real estate, that's your expertise, right? Where are prices going from here?
Well, given the recent news on the economy, it might seem like the Fed is going to keep raising interest rates in the near future, at least in a moderate pace. But that's going to affect negatively prices. But in the area overall, I think that the change in prices will be minimal, but still negative effect, a negative pressure on prices for the South Bay.
All right, with mortgage rates at a 23-year high, is that starting to bite? And what about this hot labor summer, now hot labor fall we're seeing? Is that also being felt here?
Yeah, definitely. And we can tell that also that the only bright spot in the housing market has been new construction, just because the big builders are able to factor in a little bit of buying down some of the interest rates, and that's keeping up the market afloat. But the market has just been not in good shape. But again, it's the South Bay, so everybody wants to live here. So eventually we'll bounce back.
Right. And the weather? We got Chamber of Commerce weather here today, right?
The weather is good. So in Southern California, it's sunny. So everything's good.
Right. They say all real estate is free here in Southern California. What you pay for is the weather, right?
Exactly. Land is free. Building is free. The weather is the nicest. Well, and the people of the South.
Especially here at Cal State Dominguez Hills. And Dr. Prager, let me ask you this. It looks like weather, according to the Business Fed recent survey, is the number one reason businesses are staying here in Southern California at the moment. What about the effort to make this area more business-friendly, or is it already business-friendly?
I think overall it is business-friendly. Obviously, there's many different natural amenities that make this region fantastic as a business operator. But as Jose said, the human capital side of things is significant. You know, we in education focus a lot on workforce development, obviously, and together with our other CSU partners, with the amazing UCs in the region, the private colleges, we're producing more PhDs than any other region in the country. We've got fantastic education levels across the board, and we were just talking with one of the presenters at the panel today. You know, they located here because of the people. They want to be able to hire high-level aerospace experts, and you could only find those in Southern California.
All right, we can add people to the list along with weather for reasons why people are staying here, so that's very, very encouraging. Now, among the presenters of this 3D printing company, and what other things are getting your attention here on the innovation front?
Well, the 3D printing of homes is a really interesting innovation, and things like this need to happen. We've got a real housing deficit in the state, and especially in Southern California. You know, by our estimates, there's a deficit of around 120,000 units per year. That's even with the flat population levels at the moment. Even with a flat population level, people want more housing. You know, if you've got a family of 4 and the kids grow up, where are they going to live? You need more housing. And so in order to build enough to meet that demand, we're going to have to find innovative solutions like 3D printing, like rezoning, like infill. You know, whatever we can, we need to do it.
And Dr. BRODMANN, I believe you were here for the State of the Business event that the LA Chamber had organized here. And at that time, we were discussing another big economic engine here in the South Bay for 6 days. That was Taylor Swift with her concerts, pumping more than $300 million into the local economy. Certainly entertainment, a big part of the area here, too.
Yes, there's the one thing that's also a really key driver is the fact that we have such established infrastructure. We see World Cup and the Olympics coming here soon, and one of the major competitive advantages we have is that all of the arenas and the large venues that we have, so then they don't have to spend as much money on building that infrastructure. It already exists, so it also is more cost effective and sustainable.
Fantastic. And Dr. Martinez, final thoughts here on this big event.
Well, this is an example of the richness of the area, bringing companies, innovative companies, and city officials and companies, business leaders. I think this is the place that shows that the capital that is in the South Bay, and we're here to learn from each other. But overall, this is a good opportunity for everybody to enjoy and to see the richness of the area as a whole.
Dr. Jose Martinez, Dr. Jennifer BRODMANN, and Dr. FYNNWIN Prager. The South Bay Economics Institute at Cal State University Dominguez Hills at the premier economic forecasting event for this region. Thank you very much for joining us here on Mottek On Money on 790 KBC.
Thank you very much.
Thank you.
Thank you so much.
You loved Lala Kent on Vanderpump Rules. Now get to know her on Give Them Lala.
When you get married, I'm letting you know, no one gives but you. And when you get remarried, then people really don't, except you. No one needs to hear your backstory and speeches given. It's so boring. Have a cap, like no longer than a minute. No one cares about your love story. I know it's hard to hear.
Watch what Lala is talking about on YouTube or search for Give Them Lala wherever you listen.